right, stock started the week on a positive foot. Nice rally today, rebounding into Friday morning's gap, the post-employment gap. Not all the way for the S&P, but did get pretty much most of the way on the Russell 2000. So nice little rebound. Everything that we want to see going up higher did today. So now that's the question, right? We talked about on Friday the buy the dip signals that were there. And they bounced today. So the question is, are we going to continue higher or not? What are the intermarket relationships telling us? Because there are a few things that are kind of like still at inflection points themselves. That we are still susceptible to weakness in the markets and volatility, seasonal volatility in the market. So we'll break that down. We'll take a look at the sector rotation, a really good sector rotation today. I'll show you why. There is still one element that's not where we want. We'll talk about which one and why that's the case and what we need to see for that to return, which kind of coincides with that intermarket relationship. And then we'll talk about our trade idea. It also had a bull tag and it has a nice little bounce back trade, and we'll talk about its opportunities and how we want to trade that. So let's go ahead and get started. Today is Monday, August the 4th, 2025. This is the Market Outlook from MarketScholars.com. My name is David Settle. All right, let's start off taking a look at the S&P 500 with the market forecast indicator, as we always do. And you can see the nice little bounce that we had here, bouncing up almost 1.5%, getting up above the SPX open. Now, of course, when you look at SPY, it's a little different. That's why it's kind of nice that you can trust that it opens a little bit more. We did get above the open. And we almost filled in the gap. We closed at 632.08. We came within less than $1 of that. So pretty darn close. The Russell 2000 actually did fill in the gap. As a result, the momentum line bounced as we kind of thought it would, right? We talked about that in Friday's market outlook with the close below the moving average. Not quite giving us the bull tag, but it was still an intermediate confirmation signal with the near-term line also in bearish territory. Well, the momentum line bounced, the near-term line stayed. So again, setting up a good a possibility like we saw, if you recall, before I left on my cruise, we talked about how on this day right here, that the near-term line fell another day, but the momentum line bounced, and it set us up for a good move higher for the near-term line to be able to cross multiple lines, 40, in this case 40 and 60, and then the momentum line to finish in the upper reversal zone. So we're set up again, barring what news comes out, but we're set up again for a nice good bounce of the near-term line across 40 and potentially one of these others, and the near momentum line to get all the way into the upper reversal zone. The intermediate line still strongly bullish, market sentiment still strongly bullish, so all that's still easily in play there. If you take a look at the Nasdaq 100, it's the same thing, right? The near-term line spends a couple days in bearish territory, but not too oversold. The momentum line comes out of oversold levels, as you would expect, into the upper half of the chart. Still at neutral levels, though. It has to, this is bullish and this is bearish. That's why they're colored the way they are. So it's not quite, it is above the chart's midpoint, but it's not in the bullish territory yet. But it does leave opportunity for it to get into bullish territory tomorrow, if not into the upper reversal zone. Also coming off of that close below the 30-day moving average. Now the Dow Jones did get a bull tag, and you can see didn't quite commit. It came a little bit further away from filling in all that gap. It had a little bit more of a gap to fill. Its near-term line also finished above bounce. In this case, it bounced, and it finished above 40, but just barely. So, again, we'll see what happens tomorrow. Momentum line's above it. Again, we are set up for a really good near-term run. We do have the light pink shading, and again, bull tags can be the beginnings of pretty decent rallies, you can see, on here, or they can be the beginnings of intermediate declines. That's why there's such, as we talked about on Friday, there's such important inflection points. The Russell 2000 did fill in all of its gap, almost got back above its moving average, so still yellow. The near-term line did cross above 20 and 40, did not get above either one of these other lines, and your momentum line is above it, but it's not very bullish. Its intermediate line is a lot further lower, so it's got the light pink shading. Market sentiment still bullish. So We had the bull tags on Friday and we bounced today. Is this, kind of what we thought would happen? If if you're in our classes, right? I know a lot of you are just foundation members, but I think the majority of you here are in our classes, and this worked out just like we thought it would, right? Just like we talked about all week. When we got, especially on Friday, during our portfolio management class and our Q&A session, we talked about the likelihood that we'd bounce early this week, and as well as in the market outlook video that night, and we did it. So now the question is whether we'll continue. And the near-term lines, the short-term sentiment lines are set up for us to continue. Now, again, doesn't mean it will happen because nothing's 100%, but they are set up for a good, continuation potentially to fill in the rest of the gap is what you would expect going into the middle of this week. All right, well, that's a preview of today's Market Outlook video. The full version is available for all of our subscribers starting at our foundation tier. You can see the link to that in the description down below. $29 a month or 2 months for free if you sign up for the yearly plan. You also get access to our Market Outlook Live, where we track all the trades. We do a trade every day in the Market Outlook. We track it and manage them every day in the Market Outlook live stream video at 3:30 Eastern time. That also includes the Market Outlook Live Trade Tracker. We keep track of all the results of all the trades we've done throughout the year, so that you can see the value of those videos relative to the $29 a month subscription. Again, we're up to about $13,000 or so in the first 6 months of the year. So it should make the $299 a year where you get the 2 months for free, well worth the subscription costs. Again, thank you very much for watching. Remember to subscribe to our YouTube channel down below. Click that thumbs up if you like our videos. Comment, share it with others. Follow me on Twitter and Facebook, LinkedIn, other social media accounts. Like our stuff there as well. Have a great rest of your Monday night, everybody. We'll see you all tomorrow.